And then the other question is, do you have access to that bank locally? Can you get to the location, jump on a sling, get on a scooter, and off you go? Should be okay. Okay, let's talk about ways that banks keep your money safe. They offer a safe and secure place for you to store your money. That's with security networks set in place, safes, that kind of stuff. The big one is insurance, though. We're going to talk about the FDIC, which stands for Federal Deposit Insurance Corporation. This is an insurance that ensures your money that you deposit in the bank will be safe up to a certain limit. So this is for banks, and it's currently $250,000 per depositor. That means if you are married and you have a split account with your spouse, then your deposits up to $500,000 is insured. Meaning if the bank goes bad and they go bankrupt, you will get your money back up to $250,000 per person who owns that account. So if it's you and your spouse, that's $500,000. It's a great way to feel safe and secure that the federal government will back up your deposits. Now, this was not the case in the Great Depression. If banks and savings and loans and credit unions went out, then what would happen is those people who had deposits in that bank would lose their money. This ensures that this will not happen again. The government is the FDIC. They are ensuring that your money will be safe. Now, if the government ever goes to the point where they can't back that up, we've got other problems. So you always want to make sure that if you bank with a bank, make sure that it is FDIC insured. And they usually are very clear and blatant about advertising that. The NCUA is the exact same thing. It's for credit unions, though. And it ensures that your deposits in a credit union are the same thing. This is one of the more important lessons that you're going to learn from this, that you want to make sure that where you save your money, it is safe. Now, investments accounts are not insured. Savings accounts are. Checking accounts are. Money market accounts are. CDs, certificates of deposit, are insured. You want to make sure that you have insurance on your deposits. Otherwise, if the bank goes bad, which did happen 12 years ago, there were a lot of banks that went under because they were making loans to people that weren't paying them back. And so they had no money to pay for people's deposits. So they were taken over by the government, and luckily people's money was safely insured. Okay, I think we talked about that. So they offer services, right? Businesses offer us services. You know, grocery store, gas station, restaurant, clothing store, they all offer services. Banks do the same thing, right? These are some of the services that banks offer that we'll talk about. They're going to help you with transactions and savings, credit, financial advice, safe deposit box, and special need payment instruments. So we're going to talk about these 5 points. Let's go ahead and get started. Okay, so we talked about interest. It's the cost of borrowing money. You can earn interest or you can be charged interest. The amount of interest earned or charged is determined by the interest rate. You guys remember the APR with the credit cards. The higher the APR, the more interest you're paying. Same thing with an interest rate. It's a percentage rate that tells you how fast you're earning money or how much you're paying money when you borrow money. So let's talk about savings tools. These are accounts that help you manage your money. Some of them may or may not earn interest. The two most common are a checking account and savings accounts. These allow you to store your money, your hard-earned money, in an account. The checking account allows you more access. The savings account is more restricted, meaning you're not going to touch the money as often, so you put it in a savings account. Let's talk about the two differences here. Checking account provides you quick access. You can access your money through checks, using a debit card. That's the big one. The debit card is connected to your checking account. You swipe it, it is then the money is then drawn from your account. Different from a credit card. Remember, credit card comes from the bank that lends you the money. So they lend the money out, then you pay them back. This one comes directly from your checking account. Withdrawing cash from an ATM or going to inside a bank and getting cash, or you can do electronic transferring. Some of these accounts do earn interest. If they do, it's not much. Most do not. Savings account is where you want to park your money. This is the perfect place to put your 6 months worth of expenses. Just park it in a savings account. It's very liquid. All you have to do is go withdraw it, and you have access to it. You can transfer it to your checking account if you need to make some kind of a transaction. This is where you store your money for your savings account. Your emergency savings account can be saved in a savings account. I personally keep mine separate in the credit union that I'm a part of. That way I don't really access it a whole lot, but it's there if I need it. I just have to drive up and take the money out. So the access is more limited. You can still get it through an ATM, through a teller. There are no checks or debit cards attached to these. You actually usually have to go in and transfer the money online, go talk to a teller, or go pull the cash out yourself. These accounts do earn interest, though. Now, when you have a savings account, should you look for a low or a high interest rate? You obviously want to make more money, so you want a high interest rate, meaning that it's going to produce money quicker. It's going to grow quicker. The most savings accounts these days are just not that impressive. It's not a big deal. I don't worry about what my interest rate is on savings accounts. Like I said, if I have my money there, it's strictly there to be accessible if there's an emergency. Okay, credit. We talked about this last unit, so we're going to fly through this. It's borrowing money, loans and credit cards. Your bank usually offers you loans for your car, and remember that's a closed-end credit, or a credit card, which is a revolving or open-end credit, and you're going to pay that money back plus interest. Okay. They're going to provide you with financial advice. Some banks, if not most banks, and some credit unions offer you advice. Once your account reaches a certain amount, they are willing to help you by offering you free advice. They usually have a financial advisor that either is assigned to a branch or bounces around, and he'll reach out to you and say, hey, I'd like to help you with your future plans. You usually get a phone call once you have tens of thousands of dollars in an account. They'll say, hey, it looks like you're just sitting on this money. Would you like us to do something with it? Those are usually financial advisors who are calling you, working for and on behalf of the bank. The safe deposit box. This is a service that I really don't use with banks. It's basically a little mini safe that's inside the bank safe. You've probably seen movies where some kind of a cat burglar crawls into the safe of a bank, and there's a bunch of different locker-looking storage areas. They're usually smaller. People store things of great value to them inside a bank. It's one of the safest ways of making sure that something of yours that's very valuable does not get stolen. That's a service banks provide you. You may or may not have to pay a monthly fee for that, depending on what account you have. And then there are also special needs payment instruments that banks can help you with: traveler's checks, certified checks, cashier's checks, money orders. These are secure payments, certified payments, so that if, for example, let me see if I can get, let's say that you're selling a car on KSL, and you don't want to just take someone's personal check for that. You want to have a cashier's check from a bank that you call the bank and verify the numbers with them, and it's guaranteed at that point. If you take someone's personal check and that check bounces and you sign the title over, you're kind of out of luck and you've got a headache on your hands. So certified checks or cashier's checks are pretty much money that is guaranteed. These are also used for deposits on apartments. Any kind of payment that needs to be guaranteed. Sometimes the person receiving the money will require that you get a certified check or a cashier's check. So banks help you with that service. Sometimes you have to pay for it, sometimes you don't. Once again, depending on what kind of account you have. All right. So in using these banks and credit unions, sometimes you just need to call and ask what services are available to you. If you have an account, they will gladly take deposits. Sometimes it's tricky if you don't have a bank account to deposit a check. I've had students here go to Check City to do that, and once again, my view of Check City still stands true. What they're going to do is charge you a fee to do that and a percentage of the check, which is just wrong. Sometimes when I was a youth and I didn't have a checking account, I would just go to the bank from which that check was written, and I would ask for, cash that check out so that I could get the cash value of that. It's probably best, though, that you start thinking and considering getting your own banking account. Now, you can't get your own. If you're under 18, you have to have a parent or guardian sign on with you to open the account. And this is something you should probably do, should have done already. It's probably about time. And most students just open up banking accounts wherever their parents are. It's super convenient. That's what I've done with my kids, and I'm happy with the credit union I'm with. So, okay. Let's see. Okay, we're going to talk about some of the features that banks offer: online banking, mobile banking, debit cards, ATMs, contactless payment. This next little section will be about this. We don't have small groups anymore, so we'll integrate that later. Let's first talk about online banking. What is it?